Today, the new governor, Dr. Philip Lowe, and the board met and they kept interest rates on hold. Now, this was widely anticipated by most economists. There were, however, a couple of economists who were looking to see a rate cut. And I think that had a lot to do with our stubbornly high Australian dollar. With the Fed Reserve in the US not moving on interest rates over there, our dollar is certainly higher than where most of us would like it. So that was potentially the trigger for lowering the cash rate. But on the whole, GDP looking fairly good, year on year, 3.3% growth. We can't complain about that compared to what's happening around the rest of the world. In addition to that, commodity prices have come off their low cycle, and that's also meant that we're seeing oil prices a little bit higher, and I think that'll flow through to some of our inflation data, and the Reserve Bank will be happy for that, where we actually are seeing some inflation in that sort of 2 to 3% bandwidth, which is where they'd like to see it. Now, that said, we've also got some developing story coming around Deutsche Bank. Now, Deutsche Bank was the biggest bank in the world, and now they're really struggling at the moment. They've got a real problem. They've been fined in the US, and they've got a $14 billion fine, yet their market capitalisation based on their share price is around that $14 billion mark. So there'll need to be something that will go on there, and there may have to be some intervention from the government of Germany to try and stabilise that, because there could be a contagion like we saw with the GFC. I mean, if you put this into context, Lehman Brothers are a very small market cap compared to the size of Deutsche Bank. So it's important that we see something done to stabilise the financial system because of that contagion effect. So it is an interesting time. We'll see those developments come out. It is Tuesday today, so it's important to understand what happens for the course of the next couple of weeks in regards to Deutsche Bank. So watch that closely, because that may trigger a rate cut here if we do see that contagion and we see the market start to collapse around the financial fabric that we've got at the moment. Now, coming back to the Australian market, this low interest rate cycle is causing Dr. Lowe some concerns around property prices. And it's well documented that there were some interventions back in August of last year into slowing down the property market and slowing down investors in the property market. And I think that concern is now again raised when we're seeing the auction clearance rates that we're seeing at the moment. Melbourne, Sydney are growing, property prices are growing in that area, and that is definitely a concern for the governor and the board, and they will look to APRA to try and do something further about that. Make no mistake, we will see, I think, further intervention if we still see the property prices growing too fast, because it is unsustainable, especially when we're talking about markets on the fringes of the city where property prices shouldn't be growing that quickly. So it really is a concern. Now, for investors, and obviously all of us as property investors, we've just got to be understanding that we are playing the long game. And in terms of where we buy a property now and the price we pay for that property is a really important point. Okay, so at the moment, we can say that is fair market value, what a willing buyer is prepared to buy for from a willing seller. But what I consider real value? What is the true value of those properties? I think we've extended beyond that in terms of what I think the true value of those assets are. So be very careful if you're looking at buying house and land packages. And you've heard this warning before, medium and high density apartments are coming off. Some of the prices, we've already seen the valuations of those properties dropping. So you need to be very particular about what you're buying, and also, more importantly, where you're buying that property. Melbourne and Sydney do face their challenges. Naturally, there are still pockets in those particular markets that we think are worth buying in, but there are definitely more pockets than not where we'd say, please avoid and don't get caught up in this cycle, okay? We need to be counter-cyclical. You need to be buying when the market's lower, where you see opportunity, or move into other markets and become that borderless investor. Thanks for watching.